The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
And welcome, everyone, to a beautiful February 20th. Fed minutes are just out. We're looking at what is a fairly strong volume already today, 2.5 billion shares. Normally, we come in around 2.2, something like that, billion shares, maybe 2.4, 2.5. Pretty strong for starting this show. We'll take a look at it. Gold was down even a little bit further than it was. It's about 2.2% on GLD right now. And we've got some other movements, most notably the housing market off. We'll get into that. We'll look at some other stocks that are moving. On this day in February 19th, on this day in 1962, John Glenn Jr. successfully launched into space aboard the Friendship 7, and first orbital flight by an American astronaut. They didn't want to take a chance of having him killed or dying because he was such a icon, and didn't allow him to go back into space. Eventually went back into politics. Got a quid pro quo from Bill Clinton on being thrown out of office, and ended up on the space shuttle much, what was it, 98, something like that, 99? So he finally made it back into space, even if he had to blackmail a president to do it. Pretty straight shooter probably back in the 60s. Probably his soul was darkened by politics over the years. But they turned him down 3 times to go back into space, and he finally found a way to make it. Not exactly sure why he went, but that's interesting. But 1962, of course, the height of the Cold War and the height of the space race. And did a very good job for us back then. A little less happy with his way of getting back in space in the 90s, but politics is what it is. I'm glad I'm not a politician. It's almost probably like the old story of flying too close to the sun with the god that had the wings made of wax, and they melted and he fell. I don't think you can get that close to that much power and money without rubbing off on you at least somewhat. Anyway, we wanted to look at some of the other things going on in the marketplace that I thought amazingly interesting while we kind of digest a little bit of these Fed meeting notes. Then we'll get on to that. Probably the most interesting thing today was Goodyear's response out to France and the president and Prime Minister of France. Is it president or prime minister? Anyway, pretty funny. Goodyear Tire literally writing a letter saying, "How stupid do you think we are? We're not in any way going to buy this tire manufacturing plant in France. Your workers won't work more than 3 hours a day. They spend 3 hours a day talking and 2 hours at lunch, and you get maybe about 3 hours of productivity out of them a day. We'd have to be insane to open up our factory there." There was one closing, and France wanted Goodyear to buy it. Kind of a damning indictment of the work ethic of the French, and maybe a good warning to us. In fact, the Goodyear tire guy said he's not that happy with his Goodyear workers in the United States. He says the plants over in Asia, they'll work twice as hard. So just one of those things where we need to constantly be reminded we are in global competition this year. Maybe France and Greece are great examples of why we don't have to go down that road. And what I wanted to get into is fairly quickly today was the stocks that are moving, because for a market that hasn't moved very far, we've done quite a bit of moving. Probably the biggest shock out here that people were not looking for was Toll Brothers. That is TOL. And it did not make earnings last night. It's off almost 6%. Last quote I have is 34.71. But we've been warning about these weak markets in housing, and probably most of them, these are going back to their January 2nd gaps, and probably in a fairly decent hurry. There's some pretty decent support at that gap in Toll Brothers around 33, and if volume drives up, it'll probably take a couple of gaps if we're still in a bull market in housing, probably a couple of times for it to hit 33, bounce, get all that energy out of it. Eventually everybody will be bored with these housing stocks, and 3 months or 6 months it'll be time to buy again. But Toll Brothers off fairly significantly on missing its earnings, and of course we've got a bunch of stocks in that same sector that look fairly weak. We were talking about the junior home builders over the last couple of weeks. Now we're talking about the big home builders. Armstrong Worldwide, which is AWI. Do I not have that on here? I have this on my list. I do not. It's off fairly significantly on basically the, what can you say, just the pin action of the housing industry. It's off almost 4%. Of course, the maker of carpets and that kind of stuff, basically finally filling a fairly long gap out here over the last few days. Got up, spiked above it, and in fact, probably I'm going to have to talk to Steve Rhodes tonight about his thing tonight, but almost a nice little island reversal. You'd like it just a little higher out here in Armstrong Worldwide. Yeah, is it the end? Probably not. Probably going to have a pullback to these gaps. Again, almost all of them have it, and that is the January 2nd gaps out here, and we're headed to them in a huge hurry. AWI, that would be about 51 bucks. DH Horton, and what do we have on it right now? DHI is off 3.6%, 22.44 last tip, but one that actually did have and broke above the high volume high. Really never had the kind of 2 or 3 days. It has come back and closed back in the trading range. Anything below the September 21st 22.79 cent high. It did have higher volume, so could we go back and test higher on this? Sure could. This one's actually got a ways to go into its January 2nd gap up, and that would put it in the 20s. Ovenia, another one that, let's go to a shorter time span on this one. A pretty decent, almost straight move up, and no clear signal on this one, but it looks like it's ready to keep moving down into those January highs, or excuse me, January gaps. This one, probably 480 on that. What else do we have? Lumber Liquidators, kind of interesting. This one hasn't really popped down like Armstrong did. Fairly strong out here today, and volume is not all that bad. MDC, which is MDC Holdings, pretty much falling with the rest of them. And of course, it's got its find its January gap out here. Yeah, it's almost there. MDC Holdings, MHK, which is Mohawk Carpets, that we're taking a look at. Not as bad as Armstrong. When you look at these starting to roll over today, may take a few days for these to start moving. The gap on this one would take you back to, what do we got down here? Yeah, that is it. It would take you back to about 92 on Mohawk Carpets. When we look at Pulte Homes, this one has been selling off for a while. And when we look at this thing, it had a pretty nice move up, getting a fairly decent retracement already. Let's see what we have out here. We're going to start setting up confluence levels, especially, I think, in these housing groups, and you probably want to start looking at them. Support on this one comes in a little bit better, and that's going to be somewhere about 1940 to about 1650. Pretty wide confluence range, so it's probably not going to be as important as most. but already back into that range. Volume's not all that big already. Like I said, though, most of these home stocks are probably going to take a couple of days to roll back over. On Ryland Homes, it had already started rolling over a while ago, and we're looking it come in to the confluence zone, which actually it's in right now. This one's probably going to have some time if the market does start to pull back, but it is, let's say that the market decides to go and rally today and basically confound everybody on the initial sell-off of the market on the Fed news. We're off, 7 points down, 2.6 billion shares. It is right at confluence levels, so probably not going to see a great deal of volume and probably some consolidation before this thing actually does start moving down. Select Comfort, SPF. Standard Pacific Corporation, we've been talking about this one. This one's actually going to set up a fairly decent confluence level at about $5.80, and you want to be looking at that if you're into that part of it. SPF for that. We've been talking about this one for a while. Breaking out with no volume, you really had to watch it. It is back into the trading range now. It needed about 14 million shares from the September 21st high. Never got that kind of volume. Got about 10 million shares on the 1st of February, but that was pretty much all to the downside. Opened a little higher and hasn't stopped selling since. Consolidated over the last 7 to 8 days, and it brings you right back into this level 4 confluence. For those that don't understand confluence, it is when the 0.382 and the 0.618 of two different moves come very, very close. You want them to be, for the most part, a matter of pennies, not dollars. You want them to be over time. They can't be too close to each other. In this case, we've got March 6, 2012 for the first one, and then we have the second one coming in on August 2nd. Actually, I can make this a little cleaner out here so you can see. You can also use the June 1st. You've got two different confluence levels that would come close. The one I like, especially this is a good time to learn. In fact, let me write this one down because I know people are going to be asking about this. You could look at two different levels out here, one being just a tiny bit more conservative. You take the longer one, and it gives you a much better, much cleaner level, and that's going to be, if we zoom in on it here, it's going to be, 686, 690. Going to be right in there. I can't read it from 4 feet away here in the studio, but it's going to be awful close to that 690 range. That's going to be extremely good support levels on any pullbacks in SPF. We'll be back a minute and look at USG.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And as we come back, going to talk a little bit about the Path of Least Resistance newsletter. We had a trade in there. We were short GLD using using puts. We were in the March, what are they right here? Let me actually pull them up so I don't say it wrong. We were in the April 2013 160 puts. Started off in them somewhere around 250. The order in the newsletter was buying them less than 275. We got out of them today probably mid sevens or upper sevens, depending on when you sold them. And a nice little profit out here. One of the most important things with options, opposed to actually owning the equity, is selling when you can and not when you have to. I just kind of like or dislike some of the stocks that we've been seeing in my screens in the newsletter over the last few days of these miners hitting lower lows on lighter volume, not busting out those. Could it continue to go lower? Yes, we've already made a huge win in this. I'm willing to go ahead and ring the register on it. I know a lot of people are just getting short now. Probably won't be as easy from here on out. And, you know, we've already made our money. You always want to leave somebody on the opposite side of this trade. And especially in the option market, you need to get out when you can. Again, not when you have to. So just another one of those wonderful days out here to be in the options market. Again, they've been incredibly cheap. But gold out here, let's see what we've got, 1569, off $34 today. So not a bad little move out here in gold, but probably going to go sideways, I suspect, for a few more days. We might even have a bounce out here to try getting into it again on the short side. It could fall. The wheels could fall off. I'm actually thinking over time that this could move down into the 1250 range and just get people so disgusted with gold they don't want to have anything more to do with it. And then maybe I'd want to go long again. Maybe that's when it's set up for its next big move. Right now, I'm more than happy to take some money off the table, ring the register, and go on and look at some other stocks in here. Looking at a USG today, we've got basically another one of these stocks in the housing area. Big candle out here, not a lot of volume so far. Again, this is a bullish sector in the market. You're not going to find these guys all giving up at once. It's going to take a while for these people to roll over in this market. And USG, although a big candle, kind of wiping out a lot of trading that goes back to the 2nd of basically January, wiping out pretty much all the trading, with the exception of just a couple of days out here. But you've got a high volume move that's just a little under this at $28, which is going to start setting up resistance levels. And then if you look at a longer view of these, and we go into retracements, you'll see that probably not a bad deal, but you're probably going to be looking at pullbacks in USG. It could be into the $21 range. There's a couple highs, the July 18th high. I could easily see this thing coming back into that range. Just like gold, everybody on one side of the trade eventually makes it weaker, and of course everybody's going to hate it on the way down and not want to buy it, and maybe a good chance to buy this thing again. Two confluence levels, the strongest one from about 20.5 to 21.5. So it probably will bounce around in that area. And again, the last major high that before this thing really took off was the July 18th high, where it came through and it really hasn't looked back. Now, what do we need for confirmation on this? And that would be a great example of looking at the displaced moving average and the 3x3 or a 9-day moving average out here. But this is kind of the pattern you're looking for. Not as clean as a lot of them, but normally 12 to 15 days on one side of a 3x3 or a 9-day displaced moving average, a few days underneath it, and then a couple more days over it, and then a close back below it. And normally you get this kind of action. The big price move, not a lot of volume because people don't believe it quite yet. It takes 2 or 3 or 4 days to get these things moving to the downside. Let's look at the traditional moving average, because that's normally a little bit cleaner on a, I need a 9-day. So let's go ahead and get that. There we go. So you normally get a lot of days just like that. Let me zoom in here a little bit. You get 12, 15 days on one side of it. You get a few days underneath it, a couple days over the top of it. Your confirmation is the close back below it. So whether you're using a 3x3 displaced moving average or a 9-day displaced moving average, this is the exact kind of pattern that gives you the green light to sell if you're a long-term holder, and go short. Probably not this sector.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And if you've listened to the show to any length of time, probably 6 months, 9 months ago, we've been talking about the GPS companies, global positioning companies, probably getting to the point where they were going to have a tough time staying in business. Just too many people building the chips. There is a business for this, but it's never going to be what it was before. A lot of these units are actually built into the cars. They're built into people's phones. If they already have one in a phone or in a tablet, do they really need one paid by Garmin or Magellan or all the other companies? Anyway, I missed this, but it had a extremely clear sell signal out here in Garmin. And when this is a good example to go back and look at the February 22 high, and where it came in at $49.93, almost 8 million shares. A good chance of that high getting retested, and it certainly did on 2.9 million shares on May 2nd. Closed back below that high, giving you free rein to pull the trigger on this one. It's been going sideways for a number of months, since back into August. What we have now is a break of the last two major bottoms, the July 12th low and the November 12th and July 12th lows out here. And that's probably going to take you back, I suspect, with this kind of volume today, easily could take you back down to this gap, which is where is that? 10/10 of, so what is that? October 10th of 2011. Not a huge gap out here. But that'd take you back to about 33, and eventually with this kind of volume, if we get more than about 6.5 million shares today, which probably very likely could get back and test these high volume lows right around that $30 level. But breaking this low after this much consolidation, probably going to blow out this movement fairly long. Clean Harbor is another one. CLH actually up almost 6% today, 5.5%. Clean Harbor's one of the few out there getting some love. Now this one had come right back in and taken off on high volume. The real buy pattern out here, if you want to Wyckoff buy pattern, which is a huge move with a huge sign of strength with a huge volume. You pull back in and test it with lighter volume, which you did on December 20th. Came in with 2.8 million shares on the way up, 830,000 shares on December 20th. We're back into that with about 1.2 million shares. The energy's got to probably come out of this one more time, but look for Clean Harbors out here. Maybe after the next bounce, the market's probably going to be weaker, but this thing, if it can hold that $51 level long term, may be one of these stocks to be looking at. Let's see what else we had here. Wanted to talk a little bit about Boeing, one of the other stocks that's actually up today. We had someone call in a few weeks ago about being shorted, and I thought that probably $73 would be the low in this thing. He was looking for this gap at 71. And you'd really need to have something come in here. The big problem with shorting a company that's got sales out 5-7 years is exactly that. We've got a call for in Max from Houston. How you doing today, Max?
I'm doing fantastic, David. Thanks for taking my call. The reason I was calling is I had a question, or a follow-on question about the home builders. You were saying that potentially the big move is in already.
You know, it's the strongest sector out there. Normally, you don't go shorting the strongest sector. You know, you find medium ones, and even the worst sectors tend to revert to the mean, so they don't have as far enough to go down. So it is kind of a, you know, the story of Goldilocks, right?
Yeah. Mm-hmm.
Yeah. You know, the porridge was too cold, just right, and too hot. And the problem is you want that kind of medium. Stocks, if they outperform, on average, outperform the market for almost 3 years. And then they revert to the mean. So when you see something like Apple, and it runs for 2-3 years or 4 years, it's very long in the tooth. So whatever the strongest market is out there is probably going to be bought the most. And it's going to be, you're also going to find a lot of people short it because they want to. So I'm just thinking that there's probably, a great deal of that already. If you wanted to short housing, it was probably 2 weeks ago when we were talking.
And I'm holding some of the KVH and DHI puts, and they are in the money now.
Yeah. No, so I think you're fine, but you're probably halfway through the move. I know everybody's jumping up and down on gold today. I was more than glad to sell them my puts. You know, so you know when everybody wants everything, that tends to be the time. If you're already in a position, you might think of either lightening up or selling. I think what we want to look at is this market, and if we get a close below 1524 on the S&P cash today, which looks like it could be very lightly, then that's going to negate this breakout we had of yesterday. So if we get a closed back below this, I don't think you're going to have the fastest moving sector on the downside, but you're going to have the wind behind your back. I think there's a lot of other stocks, especially in the energy sector. Some of these things went up on very light volume, and we've got, like you said, gold stocks. You know, maybe there's some others out here that have been weak, have not been performing. In fact, some of the stocks I'm thinking might even be technology up here. Google and Apple, you know, probably would have wanted to be short Apple a couple of days ago. But you might even start looking at Google and Amazon up here for buying puts and stuff like that. to me, that would be, these are the weaker stocks. I hate to be shorting stocks that actually did go up on pretty decent volume. They overshot in the housing market, but now they're probably going to have 3 or 6 months of pulling back. But probably just not going to get as fast to action as you would maybe in some other sectors, would be my opinion.
Okay, so then I should hold this put a little longer.
Today would be a good thing. If we close, up at 15:30 or something, which, these guys seem to ride over the hill on every close. Steve Rhodes and I were talking about maybe we need to do something to Ken between the 3 and 4 hour, because he seems to kind of beat the horses and keep these markets going up. We were figuring out, maybe we need to do a little Nancy Kerrigan on him or something because we're short. But we've got to figure out what's going on there. But to me, a lot of the technology sector would not be a problem. When you look at the actual money, I saw an article today on Amazon about the money that they're actually making now that they're collecting taxes for these, and their sales have got to be fairly low compared to what the estimates were of these people bringing that money in. So I'm pretty sure that Amazon's already been hurt. We're probably going to find out in a couple of months in their next earnings just how tough that collecting sales tax has been on their sales. I'm thinking that there's some other stocks out here that could be fairly weak, but some of the cheaper stocks in technology have already rolled over. But it didn't, technology just didn't do much. I think that there's probably a lot of room in the technology sector out there to probably make some money on the downside. And like you said, I think probably you got about half the money that you're going to make already in the housing market. It's just probably going to be slow on the way back. Everybody's going to want to buy it. Everybody wants to buy the hot one. You get something that people are just fed up and sick with, and they want to throw out, throw up. Those are going to be good ones. And so you get a big move like today, and a lot of times not a lot of volume. And it takes 3 or 4 more days to move down. What month do you have on the puts?
And most of them are May and August. But I have I forgot which one it was, either KVH or DHI, that I have the March. I only have one of them I only have a March. The other 3 are May and August. So I have time on the other one. But
you got the sell signal today. Most likely, let me pop this up real quick. Yeah, you got the sell signal today on KB Homes.
Yeah.
And where is that going to be going out here? To me, this is what I dislike about it. You had a nice sign of strength on the 23rd. It came up on 17 million shares. It broke the previous high out here of October 19th that had 7.4. So you really have a sign of strength that went higher. I'm thinking the market's rolling over. You had even 7 million shares on February 12th. So this is not probably one of the weakest stocks out here. I'm trying to figure out where it would go if it did pull back. Maybe at the bottom of that candle, maybe $17.
Yeah, that's what I was thinking.
Yeah, so I would, if I was looking at this chart and just was able to put some white out on the top of this thing, I'd look for a chart that had, in the same chart here, that the volume patterns probably would have told me 13 instead of 17. So I'm just thinking that there may have been a little bit better play out there. But other than that, not a bad deal. And you've been doing well anyway, so who am I to tell you?
Well, no, I understand. And if I could ask you to look at McDonald's, I have the March 90 put on that, and
you can still see you can see the marks on the burger where the jockey was whipping it. Apparently, if you're in Europe, that's what you're seeing everywhere out there. So kind of interesting. Anyway, let me get rid of just one of these out here so I can look at it. Okay. I mean, I've talked about this pattern for a while, and this one makes me think that there might be one more move in this up before it rolls over. But not a bad. You still have, what months do you have on these?
I have a March. So I got 3 weeks pretty much.
Yeah, you might have, the problem is you might have a move on this. People tend to buy this thing even in down markets, thinking everybody's going to go eat at McDonald's, which is makes it a little counterintuitive sometimes. You've got two parts of one of the biggest blowouts to the downside, which would take you back to 88 to 89 bucks on this. And just again, you've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 days up. This thing does kind of close about 1 day below it. Doesn't really get above it. I would have loved to see it retest this 96 bucks first. But other than that, if this thing pulls back with the market, I'd be looking at 89 bucks on it.
Yeah. All right.
But don't be surprised. Don't be surprised if this thing tests at 96.33 yet again. That's the downside to this one in the charts anyway.
I was thinking about getting rid of it today at the close. Because I'm running out of time, and then the premium evaporates in the last 2 weeks. And
it's there's the old saying, and that is sell when you can, not when you have to. Yeah, if you're making money and things look good, there's no problem with selling. A lot of times you need to have the courage of your convictions. But like I said, we'll know a lot more on this closeout here. I mean, we're at 1520 now on the S&P, which is negating this breakout at 1524. If we continue with this kind of volume, we could see it moving down. So,
maybe one more bar.
Yeah.
That's today.
So,
all right, well, thank you very much.
You have a great day.
Appreciate it.
Okay. Anyway, we've got, that was Max from Houston Line. If you'd like to call, 877-927-6648, 877-927-6648. And any trade that you make money on is probably a good trade out there. Like they say in flying, any landing is one you can walk away from. I don't think anybody that owned a $100 million jet, though, would probably say that if they were constantly wrecking it. But you got to walk away from it. Speaking of that, talked a little bit about Boeing. It seems like they found a way to cure their battery problems. They're just going to move the cell plates away from each other, give them a little bit more room to breathe and dissipate heat. They say that is the problem, that it was not up to the specs that they were supposed to be built for by the company in China, and not surprising. But they're saying they're working with the manufacturer. They're just going to redesign the batteries. They're not going to weigh any more. They will be a little larger. And the room is going to be enough to make sure that they don't overheat. They were just packed too tightly, and that pretty much seems to be the problem. Take a look at that. ZB. And not uncommon to see these guys really do well around the Super Bowl frame. What you wanted was 1.7 million. Looking like you're probably going to get that from the previous high out here. It is gapping above October 18th high at $17.13. You're going to get that probably today easy. It is a sign of strength out here and a breakout. So we're still seeing a market that's out there. This thing could be, rolling back down here in a few days. So I wouldn't be buying any of these on the last minute. When we come back, we're going to look and see what's moving out here in the NASDAQ, and keep an eye on that S&P. A closed black below 1524 would be a pretty good signal. We'll be back in a minute.
Are you looking for a precision edge in the market? Something that can stack patterns, profits, and peace of mind. In each weekly issue explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value. It's free when you register right now. Get Larry's patterns, profits, and peace of mind you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And Now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you could be granted one wish when it comes to trading and investing, what would it be? Would you like to learn how to make consistent profits on a continuous basis? I'm Steve Rhodes with TFNN, and recently I discovered a trading pattern more powerful than anything I've ever experienced before. This pattern works on all instruments and all time frames, and on February 20th from 6:30 to 7:30 p.m., I'll teach you how to master this pattern and show you how if you began trading with $100,000 on September 14th, 2012, you could have created $35,000 in profits in 4 short months. This trading pattern will transform your life, and the live online webinar is available to subscribers of my Mastering Probability newsletter. And now is the perfect time to sign up. Plus, if you're not completely satisfied for any reason whatsoever, it comes with a 30-day money-back guarantee with absolutely nothing at risk. This is a decision you won't regret. 60 minutes that will change the way you trade forever. Sign up for Mastering Probability today at TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And as we get back and close up the day here, looks like we've got a failure in this market. It did finally get to above 1524, held it for one day, pulled back, and we continue seeing this kind of pattern. Even sometimes with volume, it just doesn't hold these highs. Today, one of the losers out here is a Mosaic. MOS is the symbol. And what we see out here is kind of a nice little reversal pattern. And kind of what you want to see in what is called the double repo pattern from Joe DiNapoli. One thing you did not have was a lighter volume at the high, so you still have that out here. But what you did have is, if you compare the two legs from the June 4th low of last year to the September 7th high of last year, and then the November 14th move of 2012, to the January 25th high out here. Energy, according to my Power Law Vector indicator, was off about 20%. You did get the volume at that high, but you closed back below it within a day. Even then, it's a false breakout. 2 million shares, enough to really say that you probably better shorts out there, maybe even in the same sector. But again, what you want to be looking at, I'm showing a 9-day moving average. Could be using the 3x3 displaced moving average, which I like a little bit better. But this one's just a little tamer to show on Tiger TV. And that is, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 days above that line. As it comes back, closes a few days below it, closes above it. The next close below it is the sell signal. So getting some fairly decent sell signals on markets that have been trending fairly well out here. Just before how much time we got left? 2 minutes. Wanted to take one more look, but it looks like we've got sellers 1517 on the S&P cash, 2.9 billion shares. So we are going to come in way under what we needed. We've been talking about for a few weeks, and this market could actually even get crashy. Talked a little bit about that, I think, with Linda yesterday. You've got to watch about these very fast-moving markets out here. Again, probably better to be in puts. We've seen the VIX up almost 10% today. Probably one of the better trades out here over the next 30 to 60 days. We're also looking at some of these other movers out here, maybe getting at the point where we're going to see a few of these stocks that did pop up on huge short interest start to crack as people go to run. I've been short a couple of these for a while. I knew that it was going to take some time to roll over at the top. We were buying April puts on these, and so we've got plenty of time left to let these things crack. I just don't like to be at these markets at very high levels without having it. GLD still being a little bit more down out here, but we'll have to take a look at that. Let's see what else we have moving on here. Just want to see if there's anything else going on before we close this day out. I'm sure we'll have a exciting thing. Not a whole lot. Copper's off 4 cents today, 361. Probably a good indication we're seeing some of this. I imagine we're probably going to see the energy stocks really start coming in tomorrow, along with this market, if we continue to see a pullback out here. We had a couple energy sectors, ETFs off close to 2% today, and I think that's probably one of the weaker sectors. Everybody's been piling into those, and just like gold, when everybody comes out of them, the exits are always narrow. You all have a safe and wonderful day. Remember, you can always catch me, same bat channel, which is channel 14 on Tiger TV between 2 and 3 every day, and in the archives. It will last forever. Be back tomorrow.